Hello friends, this is your host Rakesh Kumar. In the previous video we had seen a few examples of the rounding bottom, and before that we had seen what the rounding bottom pattern is. It is actually formed as a reversal pattern and in the downtrend, and now today in this video we are going to see the inverse of that pattern, which is called rounding top. So this pattern is formed in an uptrend and it marks the end of an uptrend in the form of a rounding top, and we will discuss this pattern in this video. Just to remind you that if you have not subscribed to our channel yet, then you can subscribe to it now to get notifications of the latest video uploads. And if you find this video useful for you, then consider pressing the like button which is there below the video. Let's start the session.
But before we begin, let us have a look at the risk disclaimer.
It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk. The losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started. Friends, before I start the rounding top, I just wanted a quick recap of the rounding bottom, which will help us in understanding what the rounding top is. Now this pattern in front of you is called a rounding bottom. It is also known as the saucer pattern because it takes the form of a saucer like this. If you mark this like, then it is in the form of a saucer. And also to notice that it is formed in a downtrend. That it is formed in a downtrend and it marks the end of the downtrend. But the pattern which we are going to discuss today is exactly opposite of it. That is, one, it is formed in an uptrend. So before we discuss the rounding top, we will see what are the essential requirements. The first requirement is that there should be a prior trend. Now because we are talking about the rounding top, so we will need a prior uptrend. So we will try and make one uptrend. An uptrend is marked by higher lows and higher highs. So this is an uptrend. Okay, this is an uptrend which is going very smoothly to the upside, and then after a trend, the next thing that we need is an advance. Okay friends, now you have to see that there is a difference between the uptrend and an advance. Whenever there is an uptrend, there are slight down also, up, down. So like this, when the trend is going up and down, it is making lows. These are the lows that it is making, this uptrend. And we have to identify where the last low was made. Just a minute, I will tell you exactly what I am talking about. I am talking about a reaction low from the new high. Now see, this was the high, this was the last high, and this is the recent high. From this recent high, if the price continues from here to the upside, then from the last high, whatever the recent low was made, which is this one, from there, when the price starts moving like this and it forms a flat top or a top in the form of a saucer, then it is called a rounding top. Okay, and whatever the high price that it has made in that time is marked as the high of the rounding top. Now actually this is a period of consolidation, and it's a period of inconsistency where the buyers and sellers are not able to decide which side to take the price. So from here till this place it is called advance, and high. I have already mentioned that the place on top is called high, and after that we have decline. The time, the place and the price, till the time it does not meet this low here, this area from the high to this place is called decline. You see friends, this is a pattern which takes weeks and months to form, so it is a very time consuming pattern, and most of the time from the advance, the time from the advance and the time to decline is almost same. So the time to advance and decline is almost same, and after the decline, when the price breaks through this recent low to the downside, to the downside, then it is called a breakout. But the breakout is not confirmed until and unless this price trades below this level, below this previous low, for more than 3 days or for more than 3 candles of the particular time frame in which you are trading. Okay, so the next ingredient after decline is the breakout. After that is the retest. Now in this breakout, till the time the price has not broken below this previous low, we cannot say that the pattern is confirmed, because the price may rise from here also and it will still make the uptrend intact. So till the time the price does not break below this low, the pattern is intact and it does not confirm a rounding top. The rounding top is confirmed only when the price breaks below this previous low, and we have not to trade it as soon as it breaks, because there is a retest. Of course, sometimes, not sometimes, but very less time it is possible that the price will continue to the downside, but most of the time price goes back to retest this broken line as a resistance, new resistance, and then heads south. So we have to enter a trade when we see the price going here. So this yellow ellipse or yellow circle is the place where you have to open the trade. Now friends, this is all about the rounding top. I'll just quickly recap this portion. First is that you need an uptrend. This pattern generally forms at the end of an uptrend, so you will see the recent low, and after that there is an advance which is in the form of a rounding top, and then from the high to decline is equal to almost from low to high, okay, which is called advance. So these times are approximately equal, or the period or the duration is approximately equal. The duration between these two is equal to the duration between the high and the break. So this is almost same time duration. After the break, you don't enter, you wait for the breaking point, which is a support, to turn into resistance after a retest, and then you enter a trade if you see some bearish engulfing or a bearish pin bar at this place, and with a small stop loss above that candlestick formation, and take profit target equal to at least 3 times whatever you have risked on that trade. I hope friends this video makes you very comfortable now to trade the rounding top pattern, and in the next video I am sure to tell you some examples from the real market, and I'll see you soon in the next video. Thank you very much for watching this.